Good evening. Ira Epstein, and here we are with your financial markets. And this particular update is for the evening of Monday, the 23rd of September, 2024. All right, you're coming down a little bit tonight in the stock market and the metal markets. Most of the currencies are also down a little bit at this point in time. Energy prices a bit higher. They were lower today with the exception of nat gas, but it is even climbing. Now, they are talking another set of hurricanes, one hitting the Yucatan, and that'll move up into the Texas region, but there's another one in the Caribbean, they're saying. And that can swing around, and they're thinking that'll take out, again, the shut-ins are going to happen in parts of the Gulf of Mexico. So we'll wait and see. I don't know enough. I'm not a weatherman, but this is driving the markets. I was surprised you weren't up dramatically higher than this today, with Israel having hit Lebanon with 1,000 air attacks today. You heard me, not 100, not 500, 1,000. Supposedly 500 people were killed, over 1,000 injured. I mean, when will this end? We're going to see the president of Iran, and we're going to see Prime Minister Netanyahu both get stage and speeches in front of the General Assembly this week. I wish somebody could talk sense into all these people. In terms of the news of the day, why don't we just go there first? You're going to have Red Book Group with their weekly retail sales at 755. Case-Shiller's coming out with home prices. How much did they go up again? Last report was 6.5% year over year. The Conference Board, U.S. Consumer Sentiment Indices. Okay, are they going to hold up? The prior month's index is 103. They're looking for a shade lower than that right now. Richmond Fed manufacturing, you know, this is always important. Last month's was a negative 19, and, you know, manufacturing is what we want to see come up. We did see good news out of the Empire State. Can we get some contagion? API came out with their weekly member stockpile data today, so that's another important one. Then, I wanted to show this. This is the Season X chart that I just put on here, all right? So what this is a 5-year chart of the S&P seasonality day by day. And normally, the word is normally, September, and we all hear that, and I've experienced it, is one of the weakest months of the year. That has not been the case this year. Not at all. We've been making record highs, right? So what's going on? Well, one of the things, and you have to admit that's going on, is the market has been leading up unusually to this beginning of the cycle of interest rate cuts. You can't argue that that's behind a lot of this. We got it. Normally it's buy the rumor, sell the fact. We had that for a day or two, and then the market went up to make new highs. Now, the weakest week of the year, I know, that's crazy, and September, if you go into the seasonals, is this week we're in right now. And then by the time you're at the end of the first week of October, you're looking for the market on a seasonal basis. The worst is over it. Do I know if seasonality is going to work? Let me explain. It has not worked in the month of September in the S&P. So I don't care if it's a 5-year track record or a 10, and I ran the 10 as well. Similar pattern. This is what I'm going to hang my hat on, that you're going to get the Santa Claus rally, that gold's going to take off in that rally as well, and the markets are going to be saying it's not only the U.S., but other central bankers have no choice but to keep cutting. The Eurozone, a prime candidate. I don't know if you're watching how poor things are going in their manufacturing engine, which is Germany, but it's terrible. And they have to take rates down to give people confidence that things are about to get better. China, you've seen China for goods. What's going to happen there? You know, they're in a malaise. Do they dare do something bold? So far, they haven't. They claim they're about to on us right now. Okay. So let's go back to where we were. So as we take a look at the S&P, if the market were to finish today for the week, you're at an all-time high. Already. I mean, it doesn't back off. You can see that. Does this look to you like we had a break? You did at the beginning. And then once we got into where the Fed came in and made their cut. It reversed the month. So on the chart, you've got to give the market some leeway to understand this was a 2-year period of tight interest rates, tightening. You took it off. Will that get what's called a turbo boost as we get into this next period of October? We have the November election ahead of us, but whoever wins, as long as you have a divided Congress in terms of getting things done that are off the wall, I doubt it's going to happen, all right? That is the key. We've already heard that ex-President Trump has said if he loses this election, he will not run again. So we'll have a new set of characters to work with if he doesn't win. That's one of the ways to look at it, all right? If he does win, we get him for 4 years, and we'll still get a new set of characters after that. When we take a look at the swing lines, you're in an uptrend unless you come and take out the low of 3 days ago. So if the market takes out 57, isn't it crazy to say this? 57.33. I laugh. 57.33.25. Maybe we get something of a pullback in the market to finish off September on what was supposed to be a weak month. But as I look at it, here's your first end of the day of September. We're higher. Are we materially higher? That'll be the interesting thing as we get into the week. And remember, the month ends September 30th on Monday, but it'll be an interesting week. On pullbacks, I see support around the 56.60 level, and I see resistance literally between here and the upper Bollinger Band. You're there. Each time we get a pattern like this, it has paid attention and pulled back. Now, what's interesting is 4 days ago, you got up to the Bollinger Band, and you've really stalled out since then. So we'll see if it can give you a pullback. What about embedding? In order to embed, you cannot count tonight because we don't know where Tuesday's going to finish. So both numbers were over 80 on Monday. Both numbers on Friday were over 80. They'd have to have been over 80 on Thursday in order to embed, and they weren't. So tomorrow's the key day. Tomorrow's also a turnaround Tuesday day. And what do I mean by that? Generally, whatever you do on a stock index on a Monday, you pull back on a Tuesday. We'll see. You did get up to an all-time high, so I'd say that rule of thumb is the way to say it, is in effect. We'll see if it works. Could be just like we saw on the seasonals. You're certainly nowhere near embedded in the NASDAQ. You have support right here at 19,614 to 19,551. In the Dow, you're trying to embed and you're right into the resistance area. We'll see what happens. The Russell's not like that at all. It's got a vertical move. A breakdown in September to one of the break lows that it had. It came roaring back, and rightly so, because traders get all excited. Oh, interest rates are going to fall. The small caps are going to come alive. And they anticipated that. And you've gone into a stall since you hit the upper Bollinger Band. I don't see a trend trade per se. I see an overbought market. Then we take a look at the 10-year note, and I pointed out here you had lost the embedded reading, and the odds were you were going to fall back to the 18-day average before you got over the current high. That most certainly has worked. So in the interest rate sector, it was buy the rumor, sell the fact. Depends where in the curve yield, but I'll show you all parts of it. It certainly happened right here in the 5-year note, too. In the bonds, it did it as well, okay? The 2 years been the strongest. I'm not going to show them all, obviously. When you go to lower high, lower low in the dollar, it should have resistance tonight at 100.86. The question is, the market is not in oversold condition. Can it get enough momentum to break down again into the 114 level? That will be what I'm looking for. You've pulled back and you're fighting a battle for direction at the 18-day average in the euro. The market was overbought. It's out of that condition. So the battleground is literally right here for direction. You probably have traders buying this at 111.33, stops under this low, looking to see if they can get up to the Bollinger Band. In the British pound, the market keeps running the upper band. When it lets go of this, it's a big candidate to get back to at least the 18-day average, all right? The key is, when does it let go of that? When we look at Bitcoin, you can see how the market has come up and fighting a battle at the 100-day average, upper Bollinger Band, overbought. This is a spot where I think the pros are taking money off the table, not plowing into it. Then we get to a market that had a bear market rally into the 18-day average in the Brent, and it stalled. Now, get ready. We should be starting to move now to the December contract. This goes off the board in days. I know it's a November contract, and we're not even in October. It's how they do it. In the November gasoline, that was Brent. Okay. So now we come to, this should have been crude oil, and I got it labeled wrong. This is crude. I labeled it wrong. I'm sorry. Don't let me confuse you with that. I know it's crude oil. Just look at the prices. It followed exactly what happened there. Heating oil, I've got labeled right. I'll make a change on that in 5 minutes. But you can see all these markets rallied back to their 18-day average they're fighting. Obviously, how much of a war premium is in this market? All of them. You have to ask yourself that. And what if somehow a peace were able to be found out? Israel's going to now go into a siege mode for the 4,000 or 5,000 soldiers that of Hamas that they've corralled into an area, and that would probably be the smartest thing they can do. They don't go in anymore. They don't risk their soldiers. They cut off food, water, and they find a way to get these guys to give up, just like in, I hate to say it, in years of old, King Arthur's time, the sieges. That's a good way to do this, and don't kill anybody. Let everybody end this thing. That's all I can say. I wake up every day and I pray for that. Lower low, higher high. Terrible situation right here. What do? Well, it's a terrible because why did the market take off like this? Again, we're looking at storms coming through. So if that comes in, they're saying that could shut in again the natural gas. It's going to get cool soon. So we're going to start burning what we've been putting away. But you are overbought. I certainly wouldn't get too excited about anything going on right there. You know, one of the things I'd love to have you do is join me first thing in the morning as I'm doing my morning videos, all right? In my morning videos, what I basically do is at 6 in the morning, I start recording the futures. I'll go through 40 charts. The charts are going to look this way. They're going to be different with more studies. I'm going to talk to you the fundamentals that's going on in Asia, Europe, what's impacting the markets, anything to be concerned about in a big way. And then we'll cover futures charts, most of the time Monday through Friday dailies, but I mix in the weeklies whenever we're putting out a new position. I track in the videos any positions that you have on from beginning to end, all right? I'm not running a track record. I'm tracking that trade for you. And I do the same in the Spider ETF. So, love to have you join us. Go to IraEpstein.com research. You can move your cursor up here to the top. There'll be an icon. Go there. And with that, I'm Ira. I'll catch you tomorrow.